Oh hey, welcome back to another episode of the WyseFx YouTube channel. Just wanted to thank you again for jumping on and sticking with me. As you'll notice, this episode is a week later than usual, as I've been posting the last two episodes, on Saturday or Sunday, and doing kind of a weekly overview of my week. And you're probably wondering, hey, where was last week's video? So I can speak to that. Last week, my wife and I went on a holiday to France. We toured Paris, checked out the Eiffel Tower, went to the Louvre, went to Normandy, all that sort of good stuff, did touristy type things and enjoyed the French countryside. Originally, I had fully intended on recording stuff for the YouTube video, doing some segments in the hotel room and, shooting some B-roll and things like that as we were out and about in Paris and in anywhere in France that we ended up going. But ultimately I decided it would be best for me to enjoy my holiday. I haven't really taken a vacation, so to speak, where I wasn't interacting with the charts and doing other sorts of things. I was still involved in the Phantom community throughout the week, just kind of chatting and providing support and things like that. But for the most part, I was very much unplugged from the community and from trading, things like that. It was really nice break to have instead of trying to push myself to produce content and trade and that sort of stuff. Now, the life of a trader is said to be where you can trade from anywhere and do all these sorts of things. And while that is true, and while I could have been taking trades as I was traveling, I decided not to. I decided, you know what, I'm going to actually be present and enjoy my vacation. So ultimately, that's what I did. I had a really great week in France. And now we're back home, back to the grind, so to speak, back to the routines, and ready to get back to work and really just start recording the YouTube videos, working on things for Phantom. We have a lot of upcoming and exciting things being worked on, but yeah, that's where I was last week.
Look at the weekly chart, as we can see the week before I left, we had a lot of momentum to the downside, taking out kind of these points to the left. We're starting to take internal range liquidity, moving to the downside. If we start to look at potential areas, that make sense for price to be like, hey, if I come here, we might see some sort of reaction, demand. This is kind of the first real point of demand that popped in. We could argue it's this bearish candle, but as we came momentum here, took above kind of this high here, we came back down. What were we doing? We were tapping into demand, and then we've continued to push forward, and then we've kind of just ranged here after we reacted to supply to the left. And now we're pushing back down. I just wanted to call that out, being like, hey, this is demand. We could start to see reactions here, but if we're more specific on just kind of what we're looking at last week was just a pure continuation of the previous week's momentum. We basically created a high of the week and then we just blasted to the downsides. And, so far that's what we're doing here. Now, the caveats of this week versus say maybe last week was that we were just getting into this kind of like demand area, where this one we're, at, I guess we could almost call it the equilibrium of the demand range, fancy term for halfway point. So what does that mean? Doesn't mean a whole lot, if I'm being entirely truthful and honest. It means, we could be on the lookout for potential longs, if we start to get sensitivity on these lows as we kind of start to navigate this week. But all that said, the initial kind of thing that we're looking at when we are doing our weekly analysis here is that we came from a bearish week, previous week. If we break this low and start continuing, we're expecting selling pressure. Now, of course, we're interacting with demands, whether we draw it here, we can literally just take this whole range if we really wanted to and say, okay, this is an area of demands. If we just kind of look back at price, we can see a demand chain coming from here, took some liquidity, did all that good stuff. So there's a reason to look for potential longs in this area. But of course, we're on the weekly time frames, so it's not something we're just going to immediately jump and say, yeah, I'm just looking for longs. We need to have a reason for it. So in the back of our mind, we're saying the weekly is bearish. The continuation of that bearish momentum makes sense because we can clearly see the momentum in the market, but we're reacting to potentially demand. So we'll keep in the back of our minds as well that if we start to see price shifting, momentum shifting to the upside, this could be an early sign that the bulls are starting to step in, that demand is starting to take control. So what does that mean from a weekly candle perspective? So we could see obviously a couple of things. We could see price just continuing downwards as it already is doing, something like that. Won't bother changing the color of the candle and all that, but for this sort of purpose, we can see it's just pushing down. That's a pretty big week. It's 200 pip. So that's one obvious thing. If we get strong US dollar news, all that sort of good stuff, or we could, start to see something like this. Obviously, I'm over exaggerating these candles, but just to provide a visual kind of aid for you guys on, how I'm thinking about these weekly candles. I'm trying to think of, if we do react off of demand, maybe we'll make this just a little bit more realistic. Just, if all of a sudden we start switching to bullish today and then we end up closing like this for the week, this starts to kind of paint that scene. We're obviously saying that this candle that I've drawn is this candle. It's just changed. So that could be, how we inform bullish, but we won't know that, and we don't know that. So, we're not really going to push too much. If we go to the monthly, just to kind of take a peek at how April's shaping up, we can see a lot of momentum to the downside. But, what do we kind of see to the left as well? See a little bit of demand. We've seen that on the weekly. So this isn't, new or anything like that. What are we reacting to, to the left of that? We're getting a little bit of a demand chain. We're seeing, sensitivity to the high, sensitivity to the high. This high couldn't even push up any higher. Either way, we're just kind of getting a flavor of what's happening on the monthly. And we can see that the longs also kind of sort of align on this as well. I say kind of sort of because, if we just scrunch the chart, we've been historically bearish. We are starting to move to the upside. Momentum right now is more to the upside, but I'm getting excited and ahead of myself here. So that's kind of how I'm looking at the weekly, just kind of building on things. This was that weekly demand zone that we were kind of looking at. Monthly would be all of this. So basically just looking at this going, okay, well, from a daily perspective, us continuing to the downside makes total sense. Why? Momentum came into the market. We're breaking lows and we're forming lower highs, breaking lows and potentially forming lower highs. And when I'm talking about these candlesticks, one thing I just want to, point your attention to is if we go back to the market structure section in the course, what is the scene that we're painting in a bearish trend and downtrend? We're talking about a series of lower lows and lower highs. Now, if we just kind of fast forward to what I'm talking about here, specifically with candles, it's the exact same thing. The only thing I'm doing or not doing is going down to a lower time frame to be like, yep, this is totally happening, because we can see it happening. We can see these lower lows and lower highs happening in candlesticks. And we're using higher time frame analysis, the weekly and the daily, to see this and then frame our thoughts and overall get the idea of where the momentum's happening in the market, and saying, if we're creating lower lows and lower highs, we're in a bearish trend. Now, if we start to make a higher high, we can go to another video that's in the course. Is this a break of structure or is this a sweep? And the biggest part of that lesson is, do we continue down? Then that would be a sweep. This would just be a sweep of liquidity, or a fake out if you want to call it that. Or do we kind of just start doing this, making higher highs and higher lows? Now we can cut out the middleman and say, well, why don't we just look at candles? We don't have to go so crazy, and one thing I've found is the fact that we have spent so much time in the last 3 years really looking at the collective of the market in terms of, if I combine 18, 24 or 36 candles, whatever, and then I can make conclusions and things from that information. We're building structure from multiple candles. We're looking at order flow from a multiple candle perspective. It's been super valuable. It is super valuable. But there's something to be said about looking at each individual candle and just understanding the flow and being able to use that information and bridge upon what we've already learned. Again, that fact of the lower lows and lower highs. If I draw this maybe even a little bit differently, we can even throw in the fact that we have, supply holding and, demand failing, creating lower lows and lower highs. Now we have bearish order flow and bearish structure. We can see that in these candles, or, you might not see it immediately. It's a skill that's learned by studying candlesticks. And I've been studying candlesticks since the early days of trading. I used to sit on the chart and watch like a 5-minute candle print, just watching it ebb and flow and things like that. Some people would say it was like watching paint dry. And, if you don't like trading, it probably is watching paint dry, but I found it fascinating. Why? Because you can watch the candle move up, the candle move down, and you're like, this candle's going to be bearish. It makes total sense based on the momentum. And mind you, when I was doing this would be during Asia session because I was working and all that good stuff. So candles didn't move very fast and you didn't get a lot of momentum in the market. But you can train yourself during low momentum to see these things and understand these things. All of a sudden, when momentum comes into the market, it's like you've discovered gold. You're fine. You're good. But the point I'm trying to make is I spent a lot of time studying candlesticks, and this is all past trading experience that I'm kind of bringing back into things just to really, once again, simplify everything that we're doing, or at least provide additional context or things like that, so that we can continue moving forward with the aim of finding consistency and clarity in your trading for you guys. You know, if I can make things easier, I can make it so that you guys can look at a chart and be like, yeah, this is obvious. If we look at the daily chart based on the way the daily candles are printing, this bearish momentum just makes sense. There's no bulls. The bulls aren't home, and haven't been since, maybe here when they tried to start pushing up. And as we can see, we started to see higher highs. Did we see higher lows in the week? Not really. Maybe we could consider this a higher low. Those literally the hit. We have them within the candles for sure. We struggle to break the highs. And, when we're looking at that, we don't need to go down to a lower time frame to dig into these highs struggling to actually break and close above those highs. We'll see it on the lower time frame as well, but we can just look at the daily chart, which is why the emphasis for me, for you guys, especially in these outlooks and stuff, has, we've been talking about this stuff for 13 minutes on the weekly and daily chart and the importance of it. But anyway.
Oh, hey, it is Monday afternoon. Just got back from the gym. It has been a very busy day on and off the charts. Actually ended up taking 3 trades on pound US dollar, one for a break even, a long for 3R, and another long for 3R. I was a bit more aggressive with these trades, but having not traded last week, I felt, hey, the market was in prime condition to basically take advantage of the long momentum that we've seen in the market. So we got to capitalize when we see those opportunities. So that's what I did today. I also spent the majority of the day working on a few things for Phantom. As some of you may know, we are working on some content on how to gauge the overall momentum in the market, how to take advantage of that, and how to improve our trading even further. For me, something that I've been working on for quite some time now is how to increasingly simplify the Phantom trading strategy. I've combed through all kinds of data points, whether it be questions asked in the Phantom Trading Discord, charts submitted for feedback, or even charts that have been submitted throughout the Discord, as well as other surveys and other questions that I've asked members of the community to find what are the pain points that members are experiencing with the strategy. What are the common areas where most people tend to get tripped up when they're trying to learn how to trade? So for me as a trading coach, my biggest goal and thing that I've tried to do is simplify processes and make sure that ultimately the ethos of Phantom is being fulfilled. And that ethos is to simplify trading so that you can find consistency and clarity in your trading. So what better way to do things than to increasingly work towards simplifying what we do here at Phantom. So that's been something that I've been working on today and will continue to be working on throughout the week. But that's it for me today on Monday, and we'll check in with you tomorrow. Cheers.
So let's start on the monthly, kind of just painting the scene, kind of looking at each individual candle, not each individual candle. I mean, we'd be here all day if we were talking about something like that, but more or less, what is April looking like compared to March and kind of the last couple of candles to kind of see March rather. We kind of spiked the highs, basically took some liquidity to the high and then closed with pretty much as a doji. I don't even know if that's actually bearish yet. It's just slightly bearish. So kind of this little bearish undertone, but overall didn't really see a whole lot. And then once we've come into April here, we tried to push up and then we've just basically melted for the entire month, give or take. Now we're starting to see price action moving to the upside. And, we can kind of just see that on the monthly chart, a lot of lower wicks starting. And if we just kind of look to the left, we can say, okay, we are reacting to what looks like an area of demand. So, it is logical that we're kind of combining technical analysis and fundamental analysis to kind of understand what's actually happening on the charts. And we're using kind of that initiative to say, okay, all these things are logical and rational. Obviously, again, we're on the monthly chart, so it's not crazy information, but it's just good to have that kind of context of where we're currently sitting at. So if we start to actually see shifts in order flow bullish, we can say that, technicals from a monthly perspective are showing, we have a little bit of a demand chain forming. We're tapping into a level of demand. And if we start to push up from that, we could be essentially trying to take internal range liquidity that's resting here by the way of essentially supply trying to hold. We're kind of caught in this overall range. Anyway, that's kind of where we're at for April. As I'm sure we all know, it's always good to just kind of peek at the monthly candle every now and then, just say, hey, what is it looking like? Kind of what is it shaping up like? And then how can we translate that down to, say, the weekly time frame and so on and so forth? Because we know there's roughly 4 weekly candles in a month. We're doing some complex math today in the wall. Just kind of saying that. But, so we know that if we kind of combine those candles and it starts to make the candle that we see, a lot of momentum to the downside, and now we're met with a wick that's starting to form. If we look to the left on the weekly as well, we see that similar kind of demand zone that we are reacting off of, which again, on the monthly, it's basically this candle right here. So everything's kind of lining up in that respect, and we're starting to see the follow through potentially to the upside. So if I kind of take a step back now, and then we look at the weekly time frame, and we look at the previous week's candle and the week before, we see a lot of bearish momentum. We're starting to take, kind of swing lows. Yeah. So if we're looking at these last couple weeks on GU, we've seen, a little bit of indecision kind of coming in. We're fighting highs and lows. We're not really having any clear sense why. Again, if we look to the left, we're basically reacting off of demand here. We're trying to get a reaction after reacting to supply to the left. So the market's kind of caught in a battle of supply and demands. And then once we kind of get, not last week, the week before, this week, which I want to say is last week, which is not, we see the momentum coming. We took the highs and then seen sensitivity. Supply started to take control. Supply takes control after we take out the previous week's high. Momentum starts to come into the market. We take the previous week's low, and then we start to take, fractal lows, basically taking all of the liquidity. And that's essentially what the price, or what price is doing as we start to break below all of these lows, taking the liquidity. And then so once this candle's printed, for last week, as we entered last week, we kind of just look at it and go, you know what? Because we had a lot of momentum in the market, because we're clearing liquidity, chances are this current week's candle, or last week's candle in this respect, is likely going to be bearish. We tend to see pretty clearly, if we have nothing to the left that's really going to interact or cause any kind of riff in price, we usually see it continue. And if we just think of market structure, we see market move in a series of lower lows and lower highs. And if we kind of just look at that in a candle perspective, that's basically what we're seeing. We're seeing a lower low, lower high, lower low. And then eventually we enter a point in the market where there's a bit of a catalyst that's, potentially starts to cause us to shift. This is where we'll see an order flow shift. And this is where we enter the current week. Originally when we started the week, we said, there's a good chance that this current week's candle could also be bearish. But then we kind of asked ourselves, do we have any, key news this week? So yeah, we have a lot of PMI to kind of navigate, throughout the week. So that could be something. And then more specifically, what do we have to the left on both the monthly and the weekly charts? We have a level of demand. So we have a potential catalyst for price to want to go to the upside. So as price was moving to the downside yesterday, shorts were totally on deck. And then as we start to see, and as we're starting to trade below a low of a bearish candle on the weekly chart, or a high on, if it's bullish, we're looking for, what does price do? How do we interact with these sorts of things? And essentially, what we're going to want to see is, do we continue pushing? Do we see that momentum continue on the daily chart, the 15-minute, the 5-minute, all those sorts of things? Or do we start to see sensitivity to the low, and we start to see demand trying to take control, start to see demand entering the market, momentum to the upside, that sort of thing? And that's currently what we're seeing on the weekly chart. We're seeing the previous low basically be taken Monday, and then we start to just snap right back, and then we start to see positive PMI for pound, positive PMI for euro, and negative PMI for US dollar. So we start to see technicals aligning with fundamentals, and we're starting to see basically the rejection or the sensitivity to that low of the previous week. What is that representing on kind of its most basic sense? This would be an order flow shift on a lower time frame, and we can kind of view it as such. I kind of went crazy yesterday, so I didn't really feel the need to trade too much yesterday, or today rather, because of yesterday. And I'll briefly go over these, and then I'll kind of wrap up. I think I've been talking for a long time, so thanks for sticking with me. But yeah, so my first trade was kind of like a cheeky one where I'm I started to see, kind of the shift in order flow. Like if we read between the lines, what are we seeing here once we break above this high? Starting to see order flow shifting, supplies failing, demand's kind of trying to take control. We have some engulfing candles, so basically buy stopping above this high, trying to get that cheeky 3R, basically trading into this wick. It's all about kind of positioning yourself as well in terms of where can I get my 3R without too much issues with where I'm trading into. So if we have a level of supply just above, can I get my 3R before we really start interacting with it? Yes, I can. Okay, worth kind of taking the risk. So as this candle printed, we opened, we pushed down, and then we started to push up, and we start to see that momentum. And this is why these type of entries are effective, because we're just using our knowledge of candles to essentially trade. And then once we start approaching this high, what does our candle start to look like already? Looks pretty nice. And then once we kind of break the high, it triggers the buy stop, and then we start to expand higher. And that's effectively the logic behind the entry. It's pretty simple. The way the market was moving, once we started to break this high, and then we started to kind of form all this, order flow is shifting. And that's what we can see if we take the time to really understand the flow of candlesticks and see what they are trying to tell us. We can see the high, and we can see demand being respected, and then we can start to see the order flow shift. Yeah, you obviously can't see it. Like, oh yeah, I see exactly where that first demand got respected. Of course not. Conceptually, though, when you start to understand these things over time and experience, you can kind of get to a point where you can take those trades with a little bit more confidence. But this was a break even, so not an amazing result to the trade, but risk was managed, so that's all that matters. Now this one was a little bit better, for sure, because we have a fractal, we have a point of structure, if you want to call it that. As we're coming down, we trade below it, which is fine. And then what do? We see an engulfing candle. So when I see that engulfing candle, especially after price is kind of struggling to push lower, and then I'll kind of just point you to the way I was viewing the weekly and the daily at this point, kind of having the idea that we could be trading long based on weekly and daily and monthly demand to the left. Once we see that engulfing candle, and how did this candle open? We opened, we pushed down, we created that lower wick, or that higher low, or perceived what we'd want to call a higher low. And then what did we do? We pushed, triggered me in. The trade was looking really nice. I'm like, oh yeah, this is great. And then what happens? Whoa, we come down and we create a nice little wick. So obviously it's a little bit of a problematic moment, but that's okay. You just kind of accept the risk, and as long as the low of this candle stays intact, generally speaking, you should be okay. Because what are we conceptually kind of seeing when we're trading? Under this understanding, we're just seeing higher highs and higher lows forming, and we're seeing that in the candles: higher high, higher low, higher high. This is a higher low, but this is not a higher high, so this one's kind of interesting. And then what do we see? Higher low, higher high, higher low, higher high, higher high, and then we start to get a pullback. Why are we getting a pullback? Well, it's only natural that we're starting to take out things. And then if we look to the left as well, we kind of have, again, that area of supply that was factored in for this first trade. So then once we got that pullback and then momentum came back into the market, nice engulfing candle, you'll understand why I took this trade as well. Basically expecting supply to fail based on momentum. And again, if we just look at how did that candle form to take me into that trade, we came all the way down, and then we started to snap back up. And then once we kind of hit that that high point, I got tagged in, and then price just starts moving to the upside and kind of trickling forwards. And that's effectively the three trades. So 3R here, and then a break even right there.
Oh hey, it's Friday. Can't believe I'm saying that, considering the last time I recorded for this episode was, I believe, on Tuesday. This week has absolutely flown by. I've been very busy doing all kinds of different things, so finding time to even just turn on the camera and record has just been something that I haven't exactly been prioritizing. I've been working on a lot of things for Phantom, doing a lot of content, things like that, and really focusing on coaching the community, things like that. A lot of meetings this week as well, and just a lot of heads down time, just kind of to be expected when you take a little bit of a vacation or a holiday for a week away from the charts, a week away from the community, a week away from businesses, things like that. A lot of catch up to do. So it kind of over inundated myself, and it dawns on me, when you have a lot of things going on and there are other things that maybe aren't necessarily a priority to you, there's certain things that move the needle forward, and then there's other things that are nice to do, stuff like that. You tend to kind of shy away from actually doing those things. So an example is, obviously, first and foremost, my priority is on my trading, and then it's on the Phantom community, and then my various other businesses that I have in the background. And over and above all that, of course, it's my family and all those. But from a professional standpoint, it's those few things. But then, it comes down to this YouTube channel, which is more or less a fun project that I've, tasked myself with, again, to take myself out of my comfort zone in terms of being more present on camera, being more out there in the eyes of, I guess, the public, we'll call it, trying to give my own flavor of, one, my life, my day-to-day activities, and being able to kind of share some value along the way, because, let's face it, my biggest enjoyment and passion is in coaching and seeing people move the needle in terms of their progression. YouTube has been something I've struggled to make time for. I don't want to say find time for, because there's a difference. Often we make excuses or we do things. And if I said I didn't have time, it's more I didn't make time. So, kind of putting the emphasis on myself, obviously, that I haven't necessarily made time to hit record. My end of the end of the day when I typically record the videos has been met with, quickly rushing off to the gym, because I was filming right up to the minute I had to leave, and then coming home from the gym and not really wanting to necessarily record after the gym. I'm tired, I need some food, it's family time, my kids are home from school, we're gonna start prepping for dinner and kind of ramping down for the evening, that sort of stuff. So sometimes it's not exactly the most enjoyable thing to come back up into my office and essentially talk to myself. Obviously you were watching now, but in the moment I'm just seeing myself on the viewfinder of the camera and just kind of chatting. But needless to say, for most people, and myself included up until this point, when something is not a priority, or you can find an excuse not to do something over and above, like this YouTube channel, historically, I would say, it's not worth, I'll just skip to next week. And I think for a lot of people that they can resonate with that mentality. We see it quite often. We're like, I'm going to start next week. I'm going to start my new diet next week. I'm going to start working out next week. I know this is something that I've committed, a part of my time to do. Obviously there's me talking to the camera, and then once I compile all the footage, I need to go to my computer and, do the editing and kind of get a video prepared so it can be posted on the weekend. And as a result, it's time consuming. But, finding time for all of those things, it's easy, or it would be easy for me to say, what, I've had a really busy week. My priorities, like I said, are on Phantom, my trading, my family, that sort of thing. YouTube can kind of go off to the side because it's not something crazy. I'm so early in posting these videos, the views are not crazy high. I don't have any expectations of that, nor do I really concern myself with how many people watch the videos, things like that. If you're watching, thank you. If you're finding value from this and you're enjoying it, I appreciate you for sticking with me. But I'm not doing it for those type of reasons. It's more, like I said, an accountability thing and something that I'm pushing myself to be a more well-rounded person. I'm an introvert. I've took it upon myself, and I've kind of alluded to it already, that instead of saying, we'll just kind of restart next week because clearly you didn't record enough footage for this week, you're not really making things interesting, so on and so forth. I'm gonna go ahead, I'm gonna post a video, however long it will end up being, to kind of show the reality of life when you're an entrepreneur, you're a trader, and you're trying to do other things. Instead of pushing things off and saying, I'll do it another time, I'm gonna make it a tangible effort to post a video, to talk to the camera. Definitely, when I came into my office, I said to myself, I don't think I'm gonna record for YouTube. It's something I'll do maybe next week. And then I thought to myself, no, you're gonna hop on camera, you're gonna chat to the camera probably for like 10 minutes explaining why you're kind of lazy or whatever, and that, instead of pushing it off, you're gonna do it. So I think the big thing I'm trying to get at here is kind of a life lesson for a lot of people. It's so easy to fall prey to the mentality of pushing things off, because it's easy to make excuses. Let's face it. It's easy to make an excuse saying, you know what, I can always do that tomorrow, or, oh, tomorrow I'll back test, or tomorrow I'll review my trades, or so on and so forth. There's a myriad of things that we say to ourselves all the time. We make promises to ourselves every day that we break. And unfortunately, the more that we break these promises to ourselves, the less confidence, self-confidence, and belief that you actually have in yourself. If you make promises to yourself and you don't keep them, it's no wonder that you don't hold yourself in high regard. Why self-esteem can be an issue, because you're essentially lying to yourself all the time, to the point where subconsciously, if you say, hey, I'm going to get up at 6 o'clock tomorrow to do X, Y, and Z, and then you snooze the alarm, snooze the alarm, snooze the alarm, and you consistently do that, you're not making a priority to yourself. Yet we live in this state where, we can always just push it off tomorrow, and there's kind of a statement, what is today but yesterday's tomorrow? It's something that's, I've always kind of thought to myself when it comes to that. I mean, I'll be honest, a lot of the time I just say it ironically to people, but in many cases it is very true, because often we push things to tomorrow. We push them to next week. If we're going to start a diet or start exercising, and say we're thinking about it on Thursday of the week, more often than not we'll say, you know what, I'll start going to the gym on Monday, because this weekend, I'm probably going to get together with some friends, maybe have a few drinks, order a pizza, all that sort of stuff. So there's no point. And then we kind of fall into this trap. Monday's busy, so we make an excuse not to go to the gym, for example. And then all of a sudden we're back on Thursday and we're like, I really should have went to the gym. On Monday I'm going to start again. And you can see how this cycle affects our mentality. And I'm sure if we examine internally, where we stand with this sort of stuff, you can probably find many instances where you've done this to yourself. And it's unintentional. It's not like you're trying to sabotage yourself. We find this with trading as well. You say you're going to back test, you say you're going to do this, you say you're going to do that, and you don't end up doing that. You're not any further than you should be, because you haven't actually put in the work. And unfortunately, you can't get mad at the results you don't have for the work that you didn't do. So the biggest thing, or the biggest takeaway from maybe this spiel that I'm getting at here that relates to me almost not posting a YouTube video is, don't push things off because it's easy. Instead, push yourself to do better. Because again, you can only get upset about your results if you actually tried to get that result. So you can't get mad at the result you didn't get from the work you didn't do. And, I could be upset, oh, no one's watching my YouTube videos. Well, if I, took a week off from last week when I didn't post a video, and I decided not to make this video, of course, no one's going to watch my videos, because most people would be like, well, you can't even consistently follow a schedule, so why would I commit my time to watching your video? It's the same thing with yourself when it comes to all of these tasks, and so on and so forth. So with all that said, I just wanted to jump to the camera, kind of talk about that, talk about, where my head's at with kind of just how I'm battling so far this YouTube journey, this YouTube project. Obviously, like I said in the beginning, your first video is probably going to be shit. Your second video, your third video, fourth, and so on and so forth. It's a journey. I recognize that, and I've seen already firsthand me wanting to not give up, but kind of push it off. Oh, I'm not going to record today. I don't feel like it. I'm not going to record tomorrow, or I'll record tomorrow, just not today. I got a lot of stuff going on, and then tomorrow comes, and you fall into that same kind of pattern. And this afternoon is a prime example. The markets are ramping down for the week. Done a lot of content, finished up all my meetings. It's 2 o'clock in the afternoon, so I don't have to pick up my daughter from school for about another hour and a half. I have time to kind of chip away at this stuff, and instead of just sitting at my computer looking at charts and just kind of hanging out, essentially, let's be honest, that's probably what would have been doing. I thought, I have a commitment to myself and to you watching this video that I'm going to keep posting videos and keep moving the dial forward in terms of my ongoing YouTube project, and again, putting myself out there as an individual and just kind of pushing myself out of the comfort zone. Because if I chose to not, record this segment of this video and then ultimately not post the video, I am not holding myself accountable, and I'm not doing the things that I said that I was going to do for myself, and let alone you watching this channel. So, thanks for sticking with me, and hopefully this kind of goes to show you, one, I'm human. When stuff gets busy, sometimes it is easy to stray away from that, but the biggest thing we can do is take a moment, reflect on it, internalize what's happening, pause, and go, okay, I have one of two options. I can either not do it, what are the pros and the cons, or what is the kind of result that I can get from that, or I can do it, and then you can figure out what are the pros and the cons and what kind of result am I trying to get, and ultimately you'll figure out what you should be doing with your time. But yeah, that's it. That's Friday, and that's it for the YouTube video. Again, just want to thank you for watching, thank you for following, thank you for liking, thank you for commenting, all that sort of great stuff. If in the comment section you have a question that you'd like me to potentially discuss next week, I would love to hear it. That way, one, it gives me some more stuff to talk about, because as you can probably imagine, making YouTube videos, especially for me in the early days, I don't really know what to talk about. There's a myriad of things I can talk about, but in the moment, I don't think of it. So if you have a question or something you'd like me to touch on, feel free to drop in the comment. It might not happen in the next video, might not happen in the video after that, but at some point I will address all of the talking points and try to address all of the topics that come my way. But thanks again, and we'll see you in the next video.